Sean, there's some more hacks and questions people can ask when they walk into their bank. For example, there's what's known as a posted rate, the advertised rate, and then the banker in their back pocket. There's also a concept of discretionary rate. Tell us the difference.
Sure, and again, like it reminds me of when my parents went into the bank the first time to take out a mortgage. They had no clue about any of this. I mean, thankfully, there's a lot more knowledge available these days because of people's smartphones and the internet and all that. That's definitely helped Canadians become a lot more knowledgeable. But again, we don't learn about any of this in school. And if your parents aren't homeowners, like you're really left on your own to learn this stuff on your own. So yeah, like as you said, Robin, there's the posted rate, which nobody really takes, but sadly there are some people that actually take the posted rate because they don't know any better than that. But yeah, basically the posted rate is a higher rate that isn't really competitive with most with the offerings there. Like generally the posted rate is like 1 or 2% higher than the competitive mortgage rates out there these days. But yeah, definitely, as long as you're a well qualified borrower, you have good income and good credit and all that, then you should be getting a discount off that there. But yeah, like if you don't ask them, they're not going to offer. So that's really something important and something also to keep in mind that I mean, not to beat up on the big banks or anything like that. I mean, it's great if you negotiate yourself a good discount and all that there. But something to keep in mind is if you go with a fixed rate mortgage with a big bank, the thing that they don't really tell you about, I mean, it's buried in the fine print, but you pretty much have to be a lawyer to figure this out here, is that they actually use, like if you break your mortgage, they actually use the posted rate against you to calculate how much interest that they're losing on the mortgage to make the mortgage whole. So even though you might be like, great, like I negotiated a better rate, I got a discounted rate over the posted rate, they'll, if you end up breaking your mortgage later on, and I mean things can change quite a bit. I mean we're at the end of tail end of 2024 here. I mean, a 5 year term puts us into like 2029, almost 2030. I mean, that's a long time. Like, who knows what life will look like then. But yeah, the kind of secret that they're not telling you or they're not advertising is that the fixed rate, especially with the big banks, the penalties can be huge. I mean, the biggest penalty I ever saw quoted was over $40,000 for somebody to break a mortgage with a big bank. Like that's insane. Forty
Forty
thousand
forty
dollars.
thousand dollars.
Yeah, that could be like a down payment on a property. So yeah, like they don't tell you this there, so you really need to be careful. And that's why, again, I'm obviously biased myself, but that's why I'm a big fan of working with a mortgage broker. So I don't work specifically for lenders. I educate people about like, this lender is good for because they have like if you're looking for a readvanceable mortgage, the big banks can be good for that, which we're going to be talking about later. But if you're concerned about breaking the mortgage and you think there's a high likelihood of doing that, or there's even a remote chance of doing that, then it doesn't make a lot of sense to go with a fixed rate with the big bank there. So yeah, I kind of tell people how it is. Whereas if you go to the bank, like it's kind of like pulling teeth. They're not going to volunteer this
No.
information. And the sad reality is like many of them just haven't been trained and they don't even understand the way that this stuff works there because they're really sales people first. Like they yeah they're really all about like selling and meeting quotas, and they're under a lot of pressure to meet sales quotas and all that. So there's been CBC marketplace specials done on this about how much pressure that the like mortgage specialists and other people who work for the bank are under. So they just all they do is talk about the rate. They don't talk about all the other factors that matter. Like the penalty is just as important, if not even more important. The prepayment privileges, portability. There's so many other things to consider, and yeah, like I just find that just all they do is talk about the rate, and they don't talk about all of that other very important stuff, which I go over with all my clients in great detail because I don't want one of my clients to come back to me and say like plans have changed, Sean. I need to break my mortgage. Like, why didn't you tell me about the big penalty here? Like, I'm surprised the penalties 20,000 or 25,000, like I definitely educate people about my clients about all that stuff up front so that they can avoid a situation like that because I don't want
Absolutely. And
anyone
we're
to have
equipping the people who are viewing this video with this knowledge now, right? And as you said, the big five banks are not the only game in town. That's why it's good to go to someone like you, a broker who has access to other lenders out there. And the way I see, signing up for a mortgage is when you walk into a car dealership, you're not going to pay the listed price that's on the windshield of the car. You're going to negotiate, and the salesperson is going to go up to the guy, the finance guy, who's a little bit elevated on the counter there at the back of the dealership, and ask for a little bit of better price. But the point is, you don't pay for the posted rate. So tell me about that strategy. I know that when you signed up for your mortgage in the house that you paid after 3 years and 2 months, you had privileges, right? And you requested those in your mortgage where you could pay down your principal. Tell us about that.
Yes, so a key thing that enabled me to do that was I had very generous prepayment privileges. Again, not to beat up on the big banks, but they can be very stingy with the prepayment privileges. Like many of them only let you do lump sum payments once a year on your mortgage anniversary date. So basically, if you have like a whack of money, like you basically have to hold on to it and wait until your mortgage anniversary date. That could be months away, a year away, or something like that, and you're incurring interest in all of that time period there. So I went with a lender who had very flexible prepayment privileges. The lender's name was First National, and people like First National, like more people that I speak to these days are familiar with them. But there's two main categories of lenders out there. There's the big five or big six banks. There's the banks and the credit unions. I like lumping them into one category together. And then there's another category of lenders. They go by several different names, but like the technical name for them is monoline lender because they just deal in one line of business, mortgages. But if I say monoline lender to my clients, their eyes are probably going to glaze over and they're not going to understand what that means there. And even for me, it's a bit confusing. But yeah,
It's a
like I
better
like
term than B lender, right? Which
yes,
is usually what people call B lender if it's not one of the big six or the big
yeah,
five or including the
technically
credit unions.
yeah, technically it's not. They're not B lenders. What I like to call them is online lenders. That's the name that I've went with because I just think it's a better description
Hmm.
of them. Because yeah, they don't have physical bank branches, most of them, but because they don't have all of the overhead costs of the big bank, they're able to pass along the savings to you in the form of more competitive interest rates, as well as a lot more flexible terms and conditions. So unlike the big banks where they may only let you make lump sum payments once a year, they're very flexible. Like you can put as little as usually $100 a lump sum payment against the mortgage. So if you have a bit of extra money here and there, you can toss it against the mortgage, and their penalties are also calculated in a significantly fairer way than the big banks. So yeah, that's why it's very important to like if you like for example if you were going to follow up on your car dealership example there, Robin, like if somebody was going to buy a car at a car lot, like they wouldn't buy a car like for example if you were buying a car tomorrow, Robin, like would you just buy a car based on the sticker price and not look at anything else, like the color of the car, not look at the safety of the car, any of the features? Like nobody would do that. Like you'd end up driving off in an old clunker lemon that probably is like lime green or something like that. So the same thing as with mortgages, like everyone wants a competitive mortgage rate, but it's so important to look at the features and the penalties and other stuff like that of the mortgage because yeah, like again, like buying a car or planning a vacation, like nobody would just do that based solely on the cost of it there. It's definitely very important to look at the other features there so that you don't end up getting burned later on. So yeah, the great thing about a mortgage broker like myself is we have exclusive access to the online lenders. You can't apply directly at an online lender
Mm.
yourself because their business model is working directly through mortgage brokers so that their
Hmm.
overhead cost is lower since they don't have to hire like huge sales force staffs like the big bank. So yeah, they basically pass the savings along to you in the form of, like I said, better overall mortgage products. So yeah, you get you get that when you work with a mortgage broker like myself.
Great. And so let's come up with more questions that people need to ask. What are the questions that someone needs to ask of their financial advisor or their mortgage broker before they sign on the dotted line?
Sure. So I could probably go on for half an hour about this here, but yeah, definitely, I would get a second opinion. Like, but if you're going directly to the bank, definitely get a second opinion. And I mean, in a perfect world, you'd initially go to a mortgage broker, but yeah, if you're still going with the bank and you've gotten an offer there, definitely it's prudent to speak with an independent mortgage broker because, like I said, I went to the bank myself. I had that experience of being at the bank and asking for a mortgage there, and yeah, like I just find that, of course, there's people who are better than others, but the vast majority of my experience has been I just find that all the bank does is talk about the rate, and they don't educate you about any of the features of the mortgage. So yeah, I would just uh, again, you could ask the big bank, the mortgage specialist there about the penalties, but unfortunately, they're just not well trained in this here. So I would definitely get a second opinion with a mortgage broker and have them educate you and go over examples with this about this here because you could ask them the big banks questions about how their penalties work, but the fact of the matter is I just find that they don't do a very good job of explaining it there.